Welcome to TalkTickers. You're here for a breakdown of NASDAQ's latest earnings call. This one's covering the first quarter of 2025.
That's right. And our goal, as always, is to slice through the usual corporate speak and give you the essential takeaways.
Absolutely. So NASDAQ's Q1. Seems like despite some general market uncertainty, they put up some strong numbers.
They really did. It was quite a solid report across the board, actually.
Okay, let's get into the headlines then. Net revenue first.
Yep, that came in at $1.2 billion.
Yeah.
Which is a 12.5% increase compared to Q1 last year. Pretty healthy.
12.5%. Yeah, that's not small. And their solutions business, how did that fare?
Also strong growth there, up 11%, reaching $947 million.
Okay. And looking ahead, the annual recurring revenue, ARR, that's always key.
Right. That climbed 9% year over year, hit $2.8 billion. So, good visibility into future revenue streams.
Solid predictability there. And the bottom line, profitability metrics.
Look good, too. Operating income saw a substantial jump, 17%.
17%. Wow. And earnings per share.
Even better, actually. Up an impressive 24%.
24% jump in EPS and cash flow.
Very robust. Free cash flow for the quarter was $674 million. So financially quite sound.
And it sounds like their efficiency drive is, well, it's working.
Yeah, they mentioned that efficiency program. They've already implemented over $100 million in savings by the end of Q1.
And they're aiming higher now, right?
Exactly. They've upped the target to $140 million for the full year. And they seem, on track to hit that.
So growing revenue and cutting costs effectively, that's a good combination.
Definitely. It suggests they're not just growing the top line, but also becoming leaner and more profitable as they do it.
All right, let's break down where this growth is coming from. How did the different divisions perform? Maybe start with capital access platforms.
Sure. Capital access saw 11% revenue growth. And it seems like the index business was a big part of that story.
The index side, right? Yeah. ARR there grew 5%.
Yeah, but the overall index revenue growth was much higher, actually.
Right.
A remarkable 26% surge.
26%. Okay, what drove that?
Well, they hit a record average AUM in their exchange-traded products, or ETPs, $662 billion.
Wow.
And it wasn't just the market going up. They saw really strong net inflows. So new money coming in, plus more derivative trading linked to their indexes.
Okay, so actual client activity and new assets.
Exactly. And interestingly, they said over half of that quarterly revenue growth came from what they call alpha factors.
Alpha factors, meaning?
Basically things they actively do, like attracting new clients, creating new index products people want, and just, executing well in market services. It's not just riding the market wave.
Got it. And is this growth just coming from the NASDAQ 100, the big famous one?
Actually, no. That's another key point. They highlighted that non-NASDAQ 100 products brought in half of the $27 billion in net inflows this quarter.
Half. So $13.5 billion into their other, maybe newer or more niche indexes?
Precisely. It shows they're successfully diversifying beyond just the flagship, building a broader base.
That's a really positive sign for the index business's long-term health, isn't it? Less reliance on one thing.
Absolutely. It suggests their product innovation and client diversification strategies are, well, they're paying off.
Okay, let's shift over to financial technology, or FinTech. How did that segment do?
FinTech reported 10% revenue growth, and its ARR was up 12%. So still solid growth.
But they mentioned something about sales cycles.
Yeah, they did note that while demand is strong overall, they are seeing some elongation in closing the really big deals. Takes a bit longer right now.
Okay, understandable given the broader environment maybe. Any standouts within FinTech?
Definitely. The financial crime management technology part, that was really strong, up 21% in both revenue and ARR.
21%? Wow, what's driving that?
They're getting good traction with smaller and medium-sized businesses, SMBs. Added 35 new ones, which is a 25% jump year over year in new SMB clients.
So expanding their reach beyond just the giant banks.
Exactly. And they also managed to cross-sell into a Tier 2 bank, which is a good sign of integration, potentially with the Identitech.
And they mentioned AI, didn't they? Some kind of Gen AI tool.
Yeah, the Copilot for entity research. Apparently usage was like 20% just from the previous quarter.
So clients are actually using it and finding it valuable for speeding up alert reviews.
Seems like it. And they're planning to roll out a similar AI feature for case management too. So leaning into that AI angle.
Interesting. Applying practical AI to solve real workflow problems in compliance.
Right. It's not just hype. It's about improving efficiency for their clients in a really high-stakes area.
Okay, what about regulatory technology, RegTech?
Also solid. Revenue up 10%, ARR up 11%. They landed a large digital bank as a new client, which is a nice win.
And upsells.
Yeah, 22 upsells to existing clients. Shows those clients are sticking around and expanding their use of NASDAQ's tools.
That consistently underscores the ongoing need for these kinds of solutions, doesn't it? The regulatory environment isn't getting any simpler.
Not at all. And the high upsell number suggests clients see value and are embedding these tools deeper into their operations.
And the last bit of FinTech, capital markets technology.
That saw a 7% revenue growth and 9% ARR growth. They highlighted 17 upsells in market technology, suggesting international expansion perhaps.
Okay. And the Calypso system.
25 upsells there. So continued demand for that core capital markets platform.
But this is maybe where some of that sales cycle commentary comes in.
Potentially, yes. Especially for the bigger platform deals like Calypso. They did flag that Q2 might see some impact from that. Plus a tough comparison to Q2 last year when they had a big strategic renewal. So something to watch next quarter.
Understood. Okay, let's move to the third big pillar. Market services. How did that look?
Market services really shone this quarter. Net revenue was up a very strong 19%.
19%? What fueled that?
Record trading volumes, basically. Record net revenues in U.S. options, including their index options, and also in U.S. cash equities trading.
So benefiting from active markets, did they gain share too?
Yes. They mentioned increased on-exchange market share in U.S. cash equities.
And they handled the volume okay. There have been some crazy high-volume days recently.
Apparently so. They specifically mentioned navigating unprecedented message traffic levels in early April, including their single busiest day ever, over 550 billion messages processed.
550 billion. That's staggering. Shows the robustness of their infrastructure, I guess.
Absolutely crucial. You need that kind of reliability when markets get that active.
So stepping back, looking at their strategic moves, we mentioned the efficiency program target being raised to $140 million.
Right. With over $100 million already actioned, shows real commitment to that leaner operation.
And the Adenta integration, cross-selling progress.
They seem pleased with that. Reported 19 cross-sales since the acquisition closed, including 2 in Q1. They reiterated their goal to get over $100 million in run rate revenue from these cross-sells by the end of 2027.
So still early days, but moving in the right direction on integrating that acquisition.
Looks like it. Leveraging those combined capabilities seems to be a key focus.
And there was news about a partnership with AWS, Amazon Web Services.
Yes, an enhanced partnership. The idea is to work together to modernize global financial infrastructure, starting with market operators, other exchanges, clearinghouses, etc.
Using NASDAQ's own experience moving to the cloud as a blueprint.
Exactly. Leveraging their learnings. This is potentially a big long-term strategic play aiming to help shift the core infrastructure of capital markets towards cloud-based or hybrid models.
Interesting. Offering more flexible, scalable, maybe more cost-effective options for market operators. That could reshape things.
Could indeed. It's definitely a space to watch.
Okay, what about guidance and shareholder returns? Any updates there?
They narrowed their non-GAAP expense guidance for 2025 slightly. Shows increasing confidence in controlling costs.
And leverage. After the Adenta deal, that was a focus.
Right. They expect to get down to a 3.3 times gross leverage ratio either in Q2 or Q3 this year. So deleveraging is progressing well.
And returning cash to shareholders.
Yes, 2 points there. First, they increased the quarterly dividend by a pretty solid 13%, up to $0.27 per share.
13% dividend hike. Nice.
And second, they continued buying back debt. Repurchased $279 million worth in Q1. This actually led to a credit rating upgrade from Moody's.
So improving the balance sheet and increasing the payout, plus share repurchases.
Yep. Repurchased 1.6 million shares of common stock in Q1 as well. So multiple ways they're returning value or strengthening the financial position post-acquisition.
Now, they did acknowledge the wider world, right? The macro environment.
They did. Mentioned heightened uncertainty from things like shifting trade policies, geopolitical tensions. They see it having a, quote, modest impact on the timing of some corporate decisions.
So acknowledging reality, but they still seem confident.
Yeah, they emphasize the resilience of their diversified model. The idea is that having revenue from trading, technology, data, indexes helps them weather different economic cycles.
But tying back to the FinTech sales cycle point, that's where this macro uncertainty perhaps bites a little.
Exactly. While they say overall demand for FinTech is strong, that uncertainty is causing some clients, especially for larger projects, to take a bit longer to commit or get ready.
And that might affect Q2 numbers a bit, especially for Calypso, given that tough comparison from last year.
That's what they indicated, yes. It provides important context for the near term. The long-term picture seems positive, but there might be these temporary bumps in the sales cycle for those big-ticket items.
Okay, so bringing it all together, what's the big picture takeaway from this Q1 report?
I mean, it paints a picture of a company executing really well, frankly. Strong performance across diverse businesses, even with those market jitters in the background. That diversification really does seem to be a key strength.
Yeah, you see it in the numbers. The index business growth, especially beyond the NASDAQ 100, that looks like a successful strategy playing out.
Absolutely. It's not just a one-trick pony.
Yeah.
And the really strong growth in financial crime management tech, that just highlights how critical those solutions are becoming for, well, pretty much any financial institution today.
The regulatory pressure isn't going away, and the criminals aren't either, right?
Precisely. And the adoption of their Gen AI tools there adds another layer of value.
And that AWS partnership, looking longer term, that signals a pretty significant strategic direction, doesn't it? Potentially reshaping capital markets' tech infrastructure.
It certainly has that potential. It's a bet on the future of market infrastructure moving towards the cloud.
And meanwhile, the increased dividend, the deleveraging, the credit upgrade, that all signals a focus on shareholder value and financial health after digesting Adenta.
Yeah, it shows discipline and a commitment to returning value now that the big acquisition is bedding in.
So even acknowledging those potential slight delays in some FinTech sales cycles near term.
Right, which is something to monitor.
The overall tone, the positive guidance adjustments, the strong pipeline they mentioned, it all suggests continued confidence and growth ahead.
Yeah, the overall momentum definitely feels positive based on this call.
Okay, let's pivot to our This Is Not Financial Advice segment. Time for an outrageous but plausible trade idea based on what we just heard.
All right, let's get speculative. So we talked a lot about the index business strength, especially the growth outside the NASDAQ 100, right?
Yeah, that diversification was a key theme.
Okay, so here's a thought experiment, and again, purely informational fun. What if you constructed a hyper-niche bet purely on NASDAQ's newest index innovations? Forget the established stuff.
For one.
Imagine identifying, say, the 5 most recently launched NASDAQ ETFs that deliberately exclude any company in, let's say, the top 200 U.S. stocks by market cap. So you're focusing entirely on their ability to create successful indexes in the smaller, potentially overlooked, or thematic corners of the market.
So a basket of brand new, non-large cap NASDAQ index ETFs. Highly speculative.
Extremely speculative. So pure play on their index creation alpha, as they called it, but specifically in these nascent areas. You're betting that 1 or 2 of these new, perhaps obscure indexes will gain significant traction and assets over time.
It's like betting on the venture capital portfolio of the index world. Most might fizzle, but 1 or 2 could really pop.
Exactly. Like backing the Indie Film Festival entries, hoping one becomes a surprise blockbuster. Huge risk. Very niche, depends entirely on NASDAQ's skill in these new segments catching on. Probably not sensible, but interesting to think about, right?
Definitely food for thought, and definitely not financial advice. Okay, that wraps up our deep dive into NASDAQ's first quarter 2025 earnings call.
We've hit the key results, the strategic highlights, and tossed around a rather creative speculative idea. Remember, this is all just for informational purposes.
We hope this breakdown gave you a clear, concise view of the essential takeaways. What stood out most to you? What further questions does this raise? Always good to keep digging.
Yeah, absolutely. Continue your own research and analysis.
And join us next time on TalkTickers for another earnings call deep dive.